And this webinar, again, we're going to go over investing directly in operating businesses, what that even means, how to properly approach it, how to value businesses, how you could even obtain legal US status by doing so, and then how this can be a very, how this can be part of a very well diversified investment portfolio across the table. Okay, and for that, guys, I have the pleasure of being here with Roberto Iriarte. Roberto has an extensive track record in banking, in financial services, advising businesses across industries, a real veteran when it comes to acquisition and disposition of operating businesses, as well as, of course, being a top real estate advisor here in the state of Florida, specifically with Avanti Way Realty, amazing company. Roberto, welcome, and thanks for being here with us.
Thank you, Arturo, for this invitation, and thank you, everybody, for joining us today.
Amazing.
Hopefully we're going to resolve all your questions, and thank you again.
Absolutely. Roberto, before we get into the nitty-gritty, I would love for you to tell us a little bit more about you, about your story, who you are, what you do, and then we can go from there.
Thank you, Arturo. I'm Roberto Iriarte. I work as a business broker in Avanti Way Realty. My background is in finance and marketing. I've been working assisting other companies, advising in acquisitions primarily, and in selling and purchasing business in the past and to now.
Got it. Amazing. Okay, then Roberto, first of all, what does investing in businesses even mean? I mean, how does that even work? How do we approach that concept? Because again, you got to remember, we're real estate guys, we're real estate people. I'm personally a commercial real estate guy. So this goes very along the lines of investing in actual commercial property. But how does that work? And then how do you actually commingle it with real estate itself, and then go from there? I believe you have a presentation for us to show.
Normally, when we are trying to, people thinks about quitting their jobs or purchasing a business and becoming their own boss. There are many reasons. If you are seeing from the buyers or the seller's perspective side, for example, what is if a small business owner wants to expand, buying a similar or complementary business, they are looking for a business to purchase. And from the seller side, some business owners want to sell their own businesses for a variety of reasons: health, relocation, retirement, being undercapitalized, or possible another business that the seller wants to engage in. And this is, if you see nowadays, when the pandemic starts, people lost their jobs, and there is an opportunity to acquire business, so it is that perspective that we are talking about when we are mentioning business. Street businesses, business opportunities like gas stations, restaurants, bakeries, beauty salons, construction, all the fields, healthcare, manufacturing. We are talking about all these businesses.
Got it. Amazing. Okay, so that's the concept of investing in businesses. Now, exactly how can someone, if someone's a real estate agent in this webinar, or someone is an actual investor, how should they approach it? I mean, big picture, how do you typically advise clients and agents to approach buying businesses? What would be, if you had to put in a step-by-step basis, what would be the next step for someone to do so?
There are some decisions to think about. First of all, what the clients or what the buyers is willing to do, their abilities, their specialty at. And then we will see, we will invite them to a meeting to find out what is the business category that they want. Is it retail, is a wholesale, is a personal, is a service, is a product, is a restaurant? We will define with these decisions with the client based in the experience, most of all. And what is the business activity? If it's a contractor, is a printing, is insurance, is a computer repair, what type of business fits best for his skills or her skills and experience above all.
Okay. And then a question that I probably would ask myself, Roberto, is why would someone rather buy an operating business versus just starting up a new one for themselves with their own idea or something along those lines?
Yes, it is a good question actually, because if you want to start a business from the scratch, it is really hard to find what business is available. I mean, it is high risk because you need to invest. Let's say, let's starting from the beginning. If you're looking for a place where you are going to establish your business,
Right.
is a new location. So if that business, when it's and starting a new one, has no providers, has no cash flow, the location is not very well known for the market, you have to train your own employees. And besides all these, don't forget about license and the requirements with the city, with the county, and with the federal state. Depend on what type of business are we talking about. There are many institutions involved in this type of license requirements, and it takes time, and time means here expenses like employees, like leasing. You have to pay the rent, and there is no income until you open the doors for the public. So starting a new business, you can do it, yes, but it's a high risk based on our opinion. And it's better that you can purchase an established business. What is you have some benefits when you are purchasing an established business, because this business is up and running. It has a cash flow immediately. You will start receiving,
Right.
you will benefit from that cash flow. You have established clients, the customers database, and there is a possibility to obtain a finance from some sources. You have assistance and training from the seller, from the previous owner, and the location is recognized, and you have a good relationship, or at least a relationship with your suppliers and vendors. So there is a big difference if you purchase an established business, and you will take advantage of all these things that I mentioned. Above all, the regulation. This business has already licensed and accomplished all the requirements to work with the normal basis.
Got it. So, and what would you say are the benefits of creating your own from scratch? Because, if you're taking a higher risk from a regulation, a permitting standpoint, and just like you said, you're coming into a new location or a new concept, like you're taking a higher risk, but what would be the financial difference between going on your own and creating a new business from scratch by creating value? Just like I always say in real estate, the number one thing, guys, that makes money in real estate is your ability to create value. That's pretty much the main reason why developers are the ones, the one specific component within the industry that make the most money, because you're literally just creating something that wasn't there to begin with. So in this case, it sounds similar, like, you're starting your own business, you're taking a higher risk based on all the factors that you were saying, different from buying an established already, like you're pretty much, and correct me if I'm wrong, Roberto, but you're pretty much just buying cash flow. Is that right? So what's the upside, the growth potential when you're buying an operating business?
Yes, as you mentioned, the cash flow is very important because you are going to start getting money from the beginning. You're going to have your own capital, working capital to continue or give it the continuity to this business to grow. And you will bring your ability and your experience to grow this business. So I would say the cash flow is the most important part, and I would strongly recommend with license and all that stuff, which takes really long time here, especially depending on what type of industry are you looking for. For example, restaurants, they need to, starting from the remodelation and working with the physical structure, having the inspections and all this stuff takes time and takes money, because you have to pay the lease, you have to pay the rent, and the business is still closed until you open, it would take up to 6 or 9 or a year.
Got it. Okay, makes sense. And a question that I probably ask myself is, in real estate, we measure at least the cash flow return on a cap rate basis. You know, we put in $1 million, we're buying at a 10 cap. That means that business, that property that we're buying is going to produce about $100,000 in cash flow a year, assuming we don't have any debt on that property. So when you're approaching business acquisitions, how do you measure that same, return on investment, and what would represent a good or a decent return on investment? I mean, how do you measure a good operating business acquisition kind of scenario?
There is no putting together all the industries that we are measuring. Different industries, different type of business categories are totally different from each other. So it is really difficult to say, if you're going to purchase, let's say, for example, if we are comparing with the residential investment, I would say if you're going to get your cash flow 5% per year, or if you're going to get for the appreciation 8% per year, so you can combine and you will receive 14, 12, or 15. That is totally different here, because we are talking about different and many industries involved. So I would say that depend of the type of industry, you can get a return of investment. And the lowest that we saw, it was 10%, and the highest that we seen, it was 23, 25%, but I strongly say that, and it is important to measure this depend on what type of industry. We cannot put together all the industries.
Okay, and that's a great point. I mean, you can't just like in, and I try to relate it back to real estate. Just like in real estate, you can't just say and commingle different asset types. Like you can't just look at office the same way you look at retail and the same way you look at residential multifamily. So that makes sense. Now, with that being said, I ask you now, like, what do you typically see? And later on, I want to ask you, of course, about COVID and the impact that COVID has had in businesses and what you've seen pre-COVID, now post-COVID, not really post-COVID, but kind of in the way out, hopefully. But going back to the question was, what have you seen historically in your experience are the industries that are the most resilient when it comes to actually investing and buying businesses?
I would say depend of the experience. Sometimes people, they don't know about the industry and they jump in this type of businesses where they are not familiar working with.
Right.
So that it is really, that hurts really bad to their financial situation,
Mm-hmm.
That sometimes it is important to depend of the industry. We do have some numbers that we need to take a look at the business to see if the business is healthy or not, besides if the business has a good client, good reputation, and all that stuff. It is important to take a look at some numbers when we are working with specific industries. For example, in the restaurant businesses or in the restaurant industry, what we do is take a look at the gross sales. We take a look at especially the rent, the lease, how much they are paying the rent, and we do numbers especially with the based on over gross sales, rent over the gross sales.
Okay.
I will give you a tip. For example, if you are analyzing a restaurant, one of the keys is measure this, what is the rent over the gross sales. If you are working with the 10% or less, it is healthy. But if it's not, something is wrong. Other thing that we measure is the food cost. it is, and you need to measure that, because probably they are doing something wrong if this number is not between 20 and 30, depend of how specialty is this business, this restaurant. But we measure these numbers. If these ratios, we can call, are not there, there is something wrong. It is important to take a look what is wrong. And if we can improve, or the owner has the buyer has the ability, or the new buyer has the ability to run this business, because you can make mistakes, and those mistakes could cost you money. And in the gas stations too, if you are not measuring the rotation of the products that you have in the convenience stores, which gives you most money of the gas stations, you will make some mistakes. For example, you need to see what type of products they are selling most, and if you don't measure this, you will lose money. And if you lost money, you probably it's gonna be a bad experience.
Got it. For sure. And so to go back a little bit, because I think it's very important, like what you just said, but to picture it a little bit more clear and transparent. What are the things that you see in businesses? What are the things that you look for in businesses that make them a healthy, sustainable business? I mean, what you just said, but can you recap a little bit on that and maybe expand a little bit further into what would be your thumbs up, thumbs out kind of scenario financially when you come and see a business financial health?
There are two situations that you have to take a look in these businesses. Every single business has two sides, the tangible and the intangible. Tangible means all the equipment, assets, future furnitures, and fixed assets, if they have,
Right.
the infrastructure or real estate involved. And you have to take a look that this is the tangible side, which allows you to produce with the other side, which is the intangible, the financial, what is the when a client comes back, the repetitive experience, why this business is growing, because clients comes back every single time to repeat that experience. So well-established customers base or positive reputation, this is the intangible side, because the clients make this repetitive experience and they have a good experience, so they come back. So we have to take a look these two, first of all, and you are going to get some information. So what information you can obtain from them. It is important to get basically the tax returns of the business.
Okay.
Sometimes we found that not all the businesses are declaring everything to the IRS.
For sure.
So we can work out with the profit and loss statement, at least 3 years of both documents. It is important to see if the business is growing, it is declining, how is the sales, how is the performance, how are the expenses, if the expenses are the same, especially the cost of the goods sold, depend of the industry, but it's important to take a look at least 3 years, the performance of the past 3 years. And sometimes if the business is not running as well as we expect, so there is an option to sell the business as an asset sale, based on the inventory, based on the futures, furnitures, and equipment that the business has. Sometimes we close deals with the owner to prove way, owner to prove means the owner proves you that they are not declaring all the money to the IRS, but they have another way of record of the books, so and they have the way to prove it, and if the buyer is agree with that, and it is a substantial, we can move forward with the closing. So this is the most important part. What we see in this, what we see specifically in these documents that we are mentioning, it is important to. The most important key here is determine the total owner benefits, how much money the new owner is going to get based on the past experience of the previous owner. So we need to find out what is the total owner benefit. And there are ways to find out this. And basically what we need to do is take a look the statements, the financial statements, to see what expenses you can take as a owner benefit. We call these the add backs. An add back is an expense that add back to the profits for improving the profit. Some owners, business owners, they use money from their own company to pay their own way of living. For example, travel, trips, transportation, dues for the club or the golf or professional sports, tickets, sometimes insurance, car insurance, health insurance, and we see the officer compensation. So this is part of the owner benefits, which is going to benefit to the new buyer, basically that.
Got it. I love it. Okay, it's very clear. Now, the $1 million question, Roberto, which we're undergoing probably one of the most unique crises within humankind for at least the past couple hundred years. Global health crisis, businesses shutting down. Now we're in the process, in the verge of that recovery of the economy. Hopefully a very, very strong recovery that we're seeing. But I'm just curious, on your end, on your experience for the past 18 months, what have you seen pre-COVID? What the status of the at least of this segment that you focus on was pre-COVID, then during COVID, and now during this recovery? What have you seen? How has the impact been in the acquisition, in the disposition of businesses, in the valuation of those businesses, and what do you see moving forward?
I would like to mention something. We from starting in October last year, after COVID, after the closure of the government closure, we started receiving many phone calls, not only local, from different area code numbers, asking about businesses. And this, we ran the business brokers department with Jerry Stappel, and we were having a conversation, what is the different from the previous year? And we realized that there are more people looking for businesses for many reasons, as I mentioned at the beginning, but especially because they want to run their own. If they lost their job, they want to run. Or if they came here to Florida to live, they want to run a business. So we have been receiving many phone calls, and the numbers and the stats shows that we have seen increasing in the selling of the business numbers. For example, as an average, businesses in South Florida are selling as an average per year 1,500. So we are seeing 1,700 businesses per year, and it's totally different. And the price, the median price, was before 150,000 median price, and now we are seeing 185,000 as an average. So what is the difference here? What we are seeing after COVID, we can see that there are three main groups, three main categories in this business, no matter what industry we are talking about. Mm-hmm. First of all, the first group, the essential businesses, they had been working no matter of the pandemic. They've been working in the day-to-day basis, near or at full capacity. They didn't suffer the closure. They have been working continuously. And this type of businesses, they are selling overpriced, at least 20% overpriced. When we are dealing with this type of businesses, essential businesses, we are seeing an increase of the sales price, So the second group, what we said in this category after COVID, we are seeing those businesses that have been closed operations either for a month or 2 months, and they have the amount of working capital to uh, or the liquidity to survive for a couple of months after the reopening. And these businesses are up and running, now, and these businesses are selling really fast too. Not at the overpriced as the first group, as the essential businesses, but they are people that they are looking for this type of businesses. And the third group, the business that they shut down completely because of the pandemic, and they had like a 20% capacity when we start over again, and or half the capacity, half of staff, or limited capacity when we start in May, June, July after COVID. And these businesses are in personal services and restaurants. But still, we have opportunities here because, as I mentioned, when you purchase an established business, you can get advantage of license, you can get advantage of the location, you can get advantage of the repairs or the improvements of the place. So it is still an opportunity to buy or to purchase this type of businesses.
Got it. Amazing. And so moving forward, Roberto, how do you see, people talking about pre-pandemic, the Amazon effect, for specifically talking about maybe more of the retail type of businesses, the Amazon effect, the e-commerce. I've never been, and I've always laughed at the fact that people actually believe that retail is going to go away. People tend to forget that we're very experience-driven organisms, and we just need to interact with people. We need to go out. We need to, we're driven by experiences pretty much. And so I've never believed the fact that retail is going to go away. Again, specifically talking about retail businesses. How do you see the Amazon effect, the e-commerce, the shift, the secular shift in how people actually go about buying and purchasing? And now when you factor in the pandemic, I mean, how do you see, if you had to just kind of paint a picture of the next 24 months, the future of retail businesses? I'm talking about the movies. I'm talking about going to, other than necessity-based businesses when it comes to retail, how do you see that moving forward? Which part of that group, of the two groups, are you in?
A good question, Arturo. I would say this is all the businesses are trying to be in the first category, creating the way to be in the essential business. Right. So if you are in the retail and you're not selling over the internet, you will disappear. And we have seen experiences of a lot of businesses because people are still, nowadays, but after pandemic, they still were staying at their places. And if you are not in the internet industry, so you will lose a great opportunity to grow up or to survive at least. So I would say if they don't go to the first category, if this business don't establish as an essential thing or how to approach to the market, they are going to disappear. They are not going to longer exist.
Okay. Interesting. Now going back to many of the people that are listening that might be interested in buying and actually acquiring businesses, what would you say, Roberto, is a good amount? I think that's a very subjective type of question, and it depends on many factors. But if you had to pick a number, I mean, what's typically a good average investment amount to come in and to buy an operating business that makes sense? I mean, is it 100,000, 500,000, $1 million, 5, 10 million? What have you seen to be and to consider a good amount to invest and actually make a winning decision when it comes to investing in businesses? And then I want to talk a little bit more about other hidden, intangible benefits of investing in businesses, like for example, getting some US legal status. But talk to me a little bit more about the first question first.
Yeah, I would say that depends of how the buyer would like to live from that business, or
Okay.
how for example, it's not the same that if you would like to afford your way of living, if you budget for a house of $5,000 lease month of a house, or $2,000 lease as a rent,
Right.
you know, it's totally different the budget that you are going to create as a way of living. So I would say it is subject to your personal budget, the way that you would like to live. You know, it is if you're going to invest, I would say the average that a good investment in order to obtain at least $100,000 in all the owner's benefit, I would say that we are talking about between 300,000 and 450,000 as in order to receive as a owner benefits, the owner's compensation or benefits that they are going to be part of your way of living. I would say that this is the amount of money. Sometimes we have clients that they said, I would like to purchase a business of $100,000. I do have this 100,000, but I would like to receive $100,000 per year. So an answer for that is, if you find that business, please join us. You know, we would like to partner you, because this type of businesses doesn't exist.
Right. Or we call it unrealistic expectations, right? And
Yeah.
that's you as an advisor. That's you know, that's pretty much what you do. You advise people. You align the reality of the markets with their expectations, and you got to educate them. And it happens every day on real estate as well, where people are looking for 13 or 15% cash on cash or cap rates. And it's just, you know, you're just not going to find that. And if you are, you're going to take a bigger risk, because you got to go to other tertiary markets. You got to take different kinds of risks. So that's very interesting. And I'm just curious, with $100,000, that's the lower range that you put. What is specifically, what type of business can you buy with $100,000?
There are many businesses that you can purchase at. For example, we do have listings right now less than $100,000. For example, we do have a smoke shop, which is 75,000 right now. And how much money it produced to the owners. This is an absentee owner, and this absentee owner gets from 25 to 35 from 25 to $30,000 per year. And this business has 2 employees, part-time employees, which is the average salary that they obtain. In total, I would say the payroll expenses are $40,000 per year, but the owner's benefits is around from 25,000 to 35,000. So if the owners wants to work at this business, you know, and is gonna make his own a way of living, he can receive at least from all this salary that he pay into this as a payroll expenses to paying for these employees, 40,000 plus the owner's benefits that I mentioned. So we are talking about, you can get at least 40 plus 30 or 40 plus 25, you can get $60,000 per year purchasing a business of 75,000. But depend on the way that you are going to approach this, and if you are going to be hands-on the business every day, you know, the basis. And this owner specifically doesn't want to be there because you need to work after hours, you need to work Saturdays, you need to work Saturdays and Sundays, you know, and the owner doesn't want to do that. We do have another business, which is $95,000, a restaurant. And this business has only opens for breakfast. It's in Coral Gables, and only for breakfast and lunch. They don't open for dinner. So the amount of money that you get in this business as an owner benefits is around $30,000 per year. So you can find many businesses right now. The way that you are going to approach this is how you are going to make this affordable of your way of living. If this 30,000 is enough for you to live, is your budget allows you to do this, go ahead, you know.
Amazing. Love it. Okay, now moving towards more of the end of the conversation, I want to finish off, Roberto, talking a little bit more about the other benefits, like I said, the intangible benefits of maybe investing in businesses for foreign investors, international investors, or maybe agents that are listening to this that have actual clients that are looking to invest in businesses, or maybe they don't even know, or they are not really actively seeking to invest in businesses, but they are actively seeking to get legal status to come and to live here in the US. So maybe they don't know they need this until they actually get educated and know about it. But before that, I wanted to ask you, how do you actually value these businesses? Meaning, typically, and that's not my area of expertise, but I've seen that a rule of thumb that's very commonly used across industries is a multiple times the against EBITDA, right? So earnings before interest, taxes, depreciation, amortization, etc. You get like a 15 multiple on EBITDA, or a 20 multiple, a 10 multiple, depending on the industry. How do you actually go about valuing a business? If you have that same, for example, the restaurant for $90,000 or $95,000, how did you guys actually came up with that number?
It is a good question, and thank you for that question, Arturo. I would say that there is no universal pricing formula when you are pricing a business. There is not such as a magic formula that is going to give you a price, and especially because we are talking about different industries.
Right.
There are multiple approaches to figuring out the value of the business. For example, we work with the comparables as the residential or commercial. We compare one business to another when we have similar information. If we are talking about a similar industry, we work with the income valuation approach. We seem to, or we work with the asset-based approach. How much asset do you have, and how much is the income of this asset is producing every year. And also we work with the industry formulas. And let's say, for example, you mentioned the rule of thumb, and we work with the formulas based on sales, and we work with formulas based on earnings and based on net profits. So we use some ratios and we do calculations. For example, the list price over sales, the adjusted net over sales. We work with the adjusted net or rent over sales, where I mentioned in restaurant. You see, for example, how much the restaurant is paying as a rent, and you do over the sales, and you will have a factor. If it's less than 10%, as I mentioned before, it is not a good, there is something wrong there, you know. So based on the formulas, we hear as a universal thing in the market, oh, you know, do the earnings before interest, tax, or depreciation and amortization times 3, and you will find the price. But I'm not sure where it comes from, you know, to be honest with you, but we hear every single day that, oh, times 3 your EBITDA, and that's it, you will find the price. But it's not such a magic formula, especially because we are talking about different industries. How you can compare gas station with restaurant, or manufacturing, or, you know, with a hair salon or personal business, you know, it is totally different. So what we do here is we work with that, you know, we use that formula just to have an idea, but there are more than 8 different methods to find out the value, and we work with 5 of them. You know, we do have a pretty good database at the Business Brokers of Florida, where we are associates. Avanti Wade, it is. We work with Business Broker of Florida as an associate of this association. Jerry Stapel is leading this department, and we have access to all this MLS database of businesses, and we have access to the all past performance. I mean, with the sold businesses, so we can compare how much was sold for, and we can compare. This is one way. So we do the industry formulas. For example, in the restaurant, if you would like to take a look and depend of what type of food are we talking about, you can work gross sales times 30% to 50%, and differs from what type of food are we talking about. You know, American food, Mexican, if it's in a sport bar, you know,
Interesting.
and you can also work, for example, gas stations is 80%. If the land is involved or not, you know, you can see as a gross sale, the 80% of the gross sale is going to help you out to determine the value, and also what is the profit of the gas, the gasoline itself, you know, because it's not everybody thinks that is a percentage, but it's not a percentage, it's just a margin. You need to figure out if it's going to be 10 cents, 15 cents, 20 cents, or less to price the gasoline itself, besides the sales of the convenience store. Convenience store could give you, for example, a 25% from 25 to 32%, depending on what products they are selling, you know, but you will see the ways to determine the value. And it is very important here when we are talking about what is the financial source that we are taking a look. If we're working with the tax returns, if we're working with the profit and loss statements, you know, it is very important to see what is that a sustainability of this financial source. You know, it is trustable or not, you know, and we will see. We can sometimes we cross information with the bank statements to see if this is, you know, accurate, or we found sometimes that this information is not accurate. So we need to reduce the price when we are purchasing a business or representing to the buyer. And as I mentioned before, one of the keys here is find out what is the total benefit. So what is the add backs, all those expenses that you are going to add to the profits to improve the profit. So sometimes you will hear in the market, what is the owner benefits, or what is the add backs, or what is the seller discretionary earnings, or as you said, what is the EBITDA, you know, earnings before interest, taxes, and appreciation and amortization, to find out for what is the multiple factor that you're gonna use for, you know, depending of industry. Sometimes we use, depend of the industry, 2.5, 3, 5, or 4.5, or 1.7. This depend of the industry, you know, and this we do work with, I would call the Bible of the business valuation. Tom West has a book of valuation where you can find all these industry radius or these multiples, and it's based on the experience. They got all the information from 20 years now for all the industries, businesses that have been sold nationwide. So we do work as well with this methodology, you know. So we use 5 different approaches to determine the business value. So there is no just one unique formula, because all of them doesn't give you, they don't give you, I mean, the same value, you know. As you are working with, let's say, comparing with the real estate residential, you have some sources. For example, if you are working with the MLS, or you're working with the IMAP, or you are working with the other sources to determine this value, you know, not all of them are going to give you the same value. The same happen in businesses, you know. All these methodologies are not going to give you the same number. So it is an approach, the lowest and the highest.
Amazing, I love it. So right, there's no, pretty much what you're saying, there's no one single approach that's gonna effectively determine the value of a business. It has to be a combination of different ones to get to that one goal. I love it. Very clear. So lastly, to finish off, Roberto, I I wanted to talk about one of the probably the most attractive advantages of investing in businesses. We're in a free market type of economy where really the government gives the benefits or remunerates people and businesses that contribute to economic growth and development, right? So one of them is the E2 program. I want you to talk a little bit more about, just like in real estate, we have the EB5 and different tax advantages and then ways for people and international investors to come into the US and get all the benefits of living in this great country. I want to talk a little bit more about how investors can get to that same goal utilizing this strategy as part of their portfolio.
I would say that I would like to speak based on my as a business investor, as a business advisor.
Mm-hmm.
I would like to talk about from that perspective, not from the lawyer or law perspective, because I'm not licensed and at law. And I would like to do this because I'm not giving any legal advice on this based on my experience. I would like to say that the one of the ways that people acquires businesses is for investing to live here in the United States. And that way, in this case, the E2 visa, the treaty investor visa, allows to do that, allows to non-immigrants or foreign investors to live in the US while operating a business.
Okay.
The term is for 1 to 5 years, depending on the treaty country. Not all the countries has this. Yesterday, I was talking with one client from Bolivia. Unfortunately, E2 in Bolivia doesn't, between Bolivia and the US doesn't work.
Okay.
Colombia, yes, I've been talking yesterday with a Chilean. Chile works. They have a treaty, is a treaty country. Ecuador, yes. Argentina, yes. So we need to find out this with a lawyer. And it's
what about Venezuela, Mexico?
Mexico, yes. I don't recall about Venezuela, but it's important, to work out with, you can search it up at the internet, you go to the uscs.gov website,
Yeah.
and you will find out where countries are in the treaty investor visa. So, but the most important thing here is to work with a lawyer, an immigrant lawyer that is going to give you a legal advice. How does it work and how you're going to prepare? Because this is part of the team, In the team, you have to have an accountant which understand very well, especially a CPA certified, which understand the foreign national accounting, and is part of the group, this lawyer, and part of the group, a business broker, which they are going to work together in find out what type of business matches or fits for this type of a specific visa. There is no limit on the amount of time that it can be renewed, allows to reside in the US while operating a business. And one good thing is about the family. What happened with the family of the investor? Spouse and children under 25 years old single receive, they are allowed to live here in the States. The spouse can obtain a work permit, and children can attend public or private schools, and there is no substantial investment in this type of visa. You can invest 100,000, 200,000. As I mentioned before, it depends the way that you would like to live, your own budget, and you invest that amount of money. At least you have to have the ownership of 50% or more. Needs to be an investment real and active. It is a company. You can work with, for example, you can buy an existing business or you can start a new one. At least you will need to prove, and you need to present, as part of the requirements, you need to present a business plan when you are applying for this type of visa. And this is going to be reviewed by the embassy or the USCS department. And they are going to take a look specifically if this business is going to be profitable or not, you know, and you have to work very strict to this business plan. So you can buy an existing business, no matter what business you would like, but that you will receive from the lawyer the good to go on what type of business you're gonna purchase, you know.
Love it. Okay, it's very clear. So what would be the around the time, and with this we can close, to give a little bit more perspective on people that might be interested in this. I mean, what's the timeline from the moment that someone is like listening to this and saying, okay, it makes sense, what's next, and about how long would it take for me to get that legal status approved and come to the US with my family?
That depends of the USCS Department of the United States, because
Okay.
they're taking some time nowadays. I'm not sure why, because these offices are working over the internet too, you know, but I'm not sure why they are taking long. Probably you have heard about that the E2 visa normally was taking up to 3 months, sometimes less,
Okay.
sometimes more. But nowadays I hear that one case that we are working with is 6 months, and we haven't received the approval as of now yet, you know, and after we submitted all the documents. And but this is that time depends on the government side.
Got it. Okay, understood. Well, Roberto, now I want to open up, guys, for any of you that have questions in regards to business investing, valuating businesses, any COVID related, pre-COVID, post-COVID, anything you want to know. Now that Roberto is here to answer those questions, feel free to leave them in the box below. I do have one, Roberto, already from Patricia Ortiz. What industry did you see the 23 to 25% return in? I think you mentioned that at the beginning of the webinar.
Yes, you will find companies that, for example, insurance companies, you will find these. You will find in gas stations, you will find in restaurants, and we are selling right now 2 hair salons that are above these numbers. One of them is located really close to Wynwood, and the other one is located in Weston. We do have that 23, 25%. And also we have seen in I would say in a few industries that I mentioned previously.
Got it. I see here. What do you think, Roberto, of the restaurant type of business and industry? I think that restaurant is I don't know, it's a tricky one. I want to get your perspective on it. Like, typically restaurants are known for having very thin margins and very risky type businesses. What do you think in general about restaurant and investing in restaurants already operating?
We need to be very careful about restaurants if you don't have the experience on running one, because first of all, don't forget that you need to open when everybody is outside, I would say. For example, Sundays, Saturdays, nights, early in the morning, and probably is going to your life is going to be a little bit, you know, it's not going to be you're not going to enjoy too much of life, you know, being in this type of industry. If you are not familiar with this, you're going to be as a slave if you don't know how this industry works.
Right.
Usually what I mentioned, if it's a Sunday and everybody goes out to have lunch or to have dinner on weekends or holidays, and what you're going to do, you know, if you are not familiar how you're going to manage. And besides that, you need to be careful with, there is cash involved, and how you're going to manage this cash, or how you're going to work with the food cost if you are losing money, if you're not measuring well. And this is very important. So I would say if you are familiar with this industry, go ahead, because you will do great. There are many restaurants that they are doing very well, and they survived the pandemic. Don't forget that people eats in the morning, lunch, and dinner 3
Right.
times a day. So, and there are very successful people that they are working in restaurants. But if you're not familiar with this and you want to jump in, I would say be careful, and especially with the besides the things that I mentioned, especially with the fixed cost, you know, the lease, the money that you are paying rent, how much you are paying in the rent, and especially in the payroll. You know, this is the main things that you have to control besides the food cost.
Absolutely love it. Well, guys, I hope you took advantage of this one. Again, we're gonna put it in our YouTube channel for you to rewatch the session. And hopefully, I mean, I definitely wanted to bring this one home with Roberto, because again, I do believe that investing directly in businesses across sectors can be part of a very well diversified investment portfolio in general. I'm a big, huge advocate of diversification. And when it comes to real estate, we definitely want to be your real estate allocation, your real estate guys. But I do believe that everyone needs to have a very diverse portfolio. And I do believe generally that this can be a part of a diversified portfolio. For many of you that are watching that are investors, and for many of you that are watching that are actual real estate agents that are taking advantage of this ecosystem, of this community that we built during these times. Again, this is a webinar series, guys, where industry leaders and experts across different fields like Roberto are invited to share their information, their knowledge, their experience, their successes, their failures along the way, so you can take advantage of it and again become a better equipped real estate professional. Thank you all of you for attending the webinar, and until the next time, Roberto, thank you.
Thank you very much, Arturo, and thank you everyone for being here with us.
Take care. Bye.